Hello, welcome back to Core Finance. I'm Matt Brown. I'm joined by Ronnie Chopra, who is a market strategist at FIXI Markets. Last video of the year, so give our viewers something to think about going into the festive Christmas break. Ronnie, starting off, let's have a look at the Sensex market, performing quite well over the year.
It has.
Is this going to continue though?
I think there's some major problems in India at the moment. We had the elections results out yesterday in Gujarat, which is the state where the Prime Minister Modi is from. So they were expected to do fairly well, understandably, but they only got 91 seats and they expected to get 150. So yesterday morning, when the results were coming out, Sensex dived quite sharply initially, because Congress, the opposition party, completely out of the blue, were in the lead in the early stages. So the market was down about 2–3%. But as the day progressed, as counting for the remaining seats came into play, the BJP party won, but with a much smaller majority than what was expected. So that kind of, it just tells you that all is not well in politics in India, and there are a lot of people that are upset with the demonetisation that took place at the end of last year, and also the GST that's come into place in the last few months, the goods and sales tax. But of more concern to me is the kind of the religious conflict that's taking place between Hindus and Muslims. And Modi has a history of not being the nicest person towards Muslims. Because up until he became Prime Minister, he wasn't even allowed to go to America because of his involvement in the Gujarat riots in early 2000, I forget the exact year. So all these kind of issues, you know, politics and economics comes into play together.
And what does that actually mean for the businesses on the ground trying to operate and build and make money in India?
Well, just for example, this morning I read somewhere that someone, a Muslim person, had bought a house from a jeweler in a state in UP, Uttar Pradesh, and apparently there were riots because a Muslim was buying a property. That's not good. You know, and there are, what, nearly, I think it's like 300 million Muslims in India. So that doesn't bode well for the market.
So at these levels, are you shorting?
Yeah, but I mean, it's not, I'm talking about the political situation that is so uncertain. And Modi is basically, he comes across as this figure that's, you know, pro-India, but it's mainly just pro-Hindus. So the other religions are kind of left aside or ostracized in a way. And that's not good from an economic point of view. Economically, India's growth rate is at 7%. Wonderful. You know, exceeding China's, but there are obviously valuation concerns with Sensex at the moment, with price earnings of, you know, in excess of 20. And also their corporate governance is very poor. All equity markets, basically, they're so high at the moment, but this one in particular has been very strong. It has had a few corrections on the way, and this election that's just taken place is possibly a catalyst to be a little bit more nervous of the markets. And also, if the situation doesn't change between Hindus and Muslims, we're going to have riots, and obviously that's not good from any point of view. Foreign investment will come to a standstill, people will be scared, and at the moment Modi seems to be getting away with it. But it's not going to be long before this takes centre stage. And yes, that's why I think the markets there are very high, and not just from a, you know, fundamental point of view, that valuations are overstretched too.
Well, let's have a look, moving back to the UK, with Marks and Spencer's. Obviously Christmas period, very key for this company, if not more so than years past.
Yeah, I mean, Marks and Spencer at the moment, it's hovering around the £3 mark, which is a multi-year low. 15, 20 years ago, these were trading at £6 or £7. They're kind of changing their strategy a little bit in terms of concentrating more on their food, because that's one of their strengths. Although the last set of results demonstrated that there was a bit of a slowdown there too. Clothes has obviously been a concern for a number of years, so they need to revamp. But what's going for the company now? Recently, the chairman, Archie Norman, has just come into to play in Marks and Spencer's. And Archie Norman has a wonderful history in the retail industry with Asda.
Asda, yep.
So with Asda, when he came in, I think it was the mid-90s or something, and then shares were trading around 30 pence, and he sold out to Walmart at £2 a share. So he has a history of companies being taken over. This is sitting duck. It's been bid for a few times before, at a much higher price than where it is currently. I think Philip Green tried to buy it at £4 a share.
Well, I was going to say, how do you think Archie Norman and Philip Green get on? Do you think that could be revitalised, or is Sir Philip Green, as he was,
it's probably like Stuart Rose and Philip Green, because you remember they threatened to throw each other off the building of the headquarters, I think, in Marble Arch.
I think they're best friends now.
So yeah, Archie Norman got a good history, and they're revamping the stores. There are approximately 1,000 UK outlets, which they're trying to streamline, get rid of some of the non-profitable ones, so becoming more efficient. They have close to 400 overseas, some are franchised. And on fundamentals at the moment, price-earnings ratio around 11 or 12, dividend yield 6%. So there's a lot of bad news factored in. I mean, as we can see from this graph, they haven't done particularly well. But compare it to the likes of maybe Macy's in the US, which is up 30% since I mentioned them about a month ago. So there's no reason why this has a lot of good as well.
From an M&A perspective, who do you think would look at them? It does seem kind of US, like Macy's, Sears, probably need to focus more on their domestic market, and shareholders wouldn't appreciate them looking overseas at this point. Do you think there could be a tie-up with, say, Next, or maybe a European company?
Years ago, they were touted as a merger candidate with Sainsbury's. Both roughly the same market cap, £5 billion for Marks and Spencer's, and Sainsbury's is around the same level. Both been dogs for a number of years, historically over the last 10, 15 years, and both of these companies have been bid for in the past. So that's one scenario, a merger. Other scenarios are that it could be taken over by a foreign predator, private equity.
Mr. Buffett?
Well, I don't know if Buffett was... It could be, it's small change. How about Bezos? For him, what's the market cap of Amazon? It's like, I don't know, $600–700 billion. This is £5 billion. That's $7 billion.
Small change, and
so it probably makes that every day. He makes that every day.
Amazon will probably go back up on the back of it. I mean, you look at the Whole Foods.
You could do.
Whole Foods trade and the food with Marks and Spencers. They could say, look, we'll strip out the clothing line and the household product line and get the food. It's a good foothold.
I'm sure he's watching.
Yes.
Giving him ideas.
You heard it here first. And so that's Marks and Spencer's. Well, CMC Markets, along with the other CFD and spread better providers, obviously in the news yesterday.
That's right.
With the ESMA and obviously the FCA looking at reducing leverage, protecting the retail investor. A lot of the spread better CFDs feel that it's probably over draconian. Saw the share price drop off yesterday.
Exactly.
Is it actually good, though, for the likes of IG and CMC?
It probably gives them longevity, doesn't it, for the clients? But also, why would CMC and IG and the like, yesterday, they're all, I think CMC was down 12%. It's a rather harsh reaction. They had a wonderful set of results a couple of weeks ago. Profits were much better than expected. Again, these are on fundamentals. These are on a price-earnings ratio of about 9 or 10. And the dividend yield is 6%. They're the number 2 player in the UK. They've also diversified into the likes of Australia, where they're now the second largest stockbroking arm. in the combination with ANZ. So they've got the Australian and New Zealand bank in partnership over there. So they're kind of diversifying abroad. So they're not just concentrating in the UK. Profits were, as I said, very good recently. They're still below their flotation price, though, because of the change in legislation last December, wasn't it, when there was talk of this reduction in leverage, margin, etc. So they haven't quite recovered back to the flotation price. But as we can see from the beginning of the year, they've gone up from around, what, £1.10, as high as, what, 175, 180. So they had a good run this year. They're back now around the 145, 150 mark after yesterday's fall. So I just think that, yeah, yesterday's fall was overdone, and probably something to buy after yesterday's sharp fall, because these companies are money-making machines, as both you and I know.
Good stuff. Well, on that note, Ronnie, have a great festive period.
Likewise.
Look forward to seeing you next year on Core Finance.
Cheers, thank you.